8/15/2020 S&P 500 remarkable bull run. And how many times have I thought that we were overbought and we have made highs and we have pulled back? Now, let me just share something about how overbought we are right now. On the weekly, we're not nearly as overbought as we were at 99.8. How ridiculous. I mean, give me a break. We're at 97.5, and the CCI still remains up there high, and the S&P made a low for the week was originally 33.26 when it snapped the first time when I said it was overbought. And we did. And we made that high of 3387.8, and we did. And now the S&P had a close at 3372.8, and it came off of those highs in this bull market. It's not nearly as overbought, but it's still overbought. Let's take a look at the daily. And we've made a lot of money shorting the S&P when it made the highs, when it gets that overbought. We're only at 91 now. And one of the things that we're going to point out on the daily is that as we are making the highs and we are overbought, but we have a declining MACD. And we do. And if you look at the previous day, we're at 4.3. And now we have dropped to 3.2. So we are going to come down here and test that 10-day moving average. That's this line right here. 3350 would be the test. And that's what we'll look at in the very, very, very short term. We do have a 20-day moving average down here right above 3,300. And on the monthly reading, again, in this monthly top, and what a nice run it was, it does have the buy signal right here. And it's very strong for this period of time. The trailing 10-month, which is this yellow line here, 10-month moving average, you can see when we got above it, we had 1, 2, and then the third month to the top, to my trend line up here. And we hit it. And we did not close above it, so it was not a success. And we still remain below those highs in the S&P. And we do for the bull run. And we'll go back once again to the weekly. We're not nearly as overbought, because we're not. And what I'm trying to tell you is that the bull run has been great, but we have not had that correction, and we haven't. And I can say that it is the dog days of August. There will be lighter volume. Volatility should pick up as the headlines hit. Any gap open up, and we do run right back into that extreme overbought. We're not extreme overbought. We were, but not right now. Not extreme like it was. But we could go right back into that if there's a gap and whatnot. So it's going to take a lot of money rotation and a lot of stocks that are still down on the year big time. Could money go in there and give that S&P a handle outside of the tech stocks and whatnot? We've seen a lot of selling on Friday in that sector again. And those winners in the individual names, oh boy, we have a lot of them. Some of those had some nice pullbacks because they too got overbought. And you don't want to buy at the highs. We're coming back down on the S&P, no doubt about it. and I'm going to make a boatload of money on that next dip and that volatility. It is the dog days of August now, and we're right in the middle of it. It's the 15th. Tomorrow, Sunday, will be the 16th. We open up Monday on the 17th. And I can just say one thing. We're going to see where that rotation is. And we're going to define the tops. We're going to find the rotation. We're going to go ahead and make a lot of money on the pullbacks when they happen. Right now, there is no big pullback yet, but it is coming. Oh, yeah.